Now, the stock market was down. Nvidia was down, weighing on the market along with tariffs. The Dow ended up dropping 194 points, rounding up, down 0.45%. The S&P was down 1.59%, down almost 94.5 points there at 58.61. Approaching that gap fill, the CPI gap fill. We'll show you that chart. NASDAQ was down 2.78%. The Russell was down 1.59%, and the VIX was up. The VIX was up 10.63%. And you know what that means. VIX had a close of greater than 10%. That means in the next two trading sessions, the VIX is predicting an 85% chance of an update on the stock market, on the S&P 500, that it will produce a bottom or a bounce in the next two trading sessions based on the VIX. Basing that on the historical data of closes above and below 10%. 85% chance we have an update. Now, that doesn't mean we can't go lower, because I think we are. Looks like we're going to try to fill that gap there with the CPI data. We're on our way to do it. What if we gap lower? We're going to get the PCE data. There on Friday, we're going to get the PCE data inflation. It came in hot with the CPI and the PPI previously. If we get the PCE data, that could give us the final push down if the January low is to hold. And if we just go back and fill the CPI gap, and we'll be watching. We're at extreme fear, and we're at very, very bearish negative sentiment. And this is you get when markets bottom, and we'll be watching to see if that happens. But the VIX is predicting we'll have an update either Friday or Monday. Now, maybe we sell off at the PCE and then try to rally next week. Don't be surprised if something happens with the tariffs. If we get, yes, good tariff news, Trump gets further concessions out of Canada and Mexico, we might see another pause. And the markets could rally on that. We're seeing very, very bearish sentiment here. So I wouldn't be surprised. And again, Trump's a deal maker. He's turning the screws, trying to get what he wants. So far, he's getting concessions. When if he gets more? If an agreement is reached, we'll be watching to see what happens. And let me just say this. The fear is a trade war. The fear is inflation. We had the tariffs in 2018 and 19, and inflation went down, not up. Initially, it started to tick up, but then it went down. Throughout the long duration of the tariffs, it went down. Just want to reassure you, again, tariffs do not cause inflation. I don't like tariffs. I don't like Trump's tariffs. I don't like the EU's tariffs. I don't like anybody's tariffs. But I understand what he's doing. Right now, tariff sheriff is rattling markets. We'll see if we get a bottom here. Look at all the negativity. We've got the fear greed index at extreme fear. Look at this reading. We have a 60 reading. We now have the lowest bearish, or the highest bearish reading, that we've had in over a year. And this is 60.6. The percent of bulls are 19.4. I've talked about how we've had this bearish sentiment. As we topped, we had this bearish sentiment in the 40s. Now it's in the 60s. Okay, the percent of bulls is way down. It's likely we didn't top with bearish sentiment and with the neutral reading with the fear greed index. We never reached greed or extreme greed. You'll see a divergence develop with the fear greed index. I'm telling you, look, we're at levels where bottoms develop, okay, with sentiment. Herd is very, very bearish here. Things likely going to happen to change that and produce a big, big rally in the market. You've got extreme readings going on with the sentiment and with the amount of fear being extreme fear, and this is what happens at bottoms. The market is at extreme fear. It's been there a couple days here this week. Okay, we had the market sharply selling off. Nvidia earnings being a drag on the NASDAQ. Nvidia taking a nosedive, dropping below the 200 period. I've been talking about that this week. I've been talking about that last week. That 200 period moving average is key. 200 period moving average key for Nvidia. And then we have President Trump, the tariff sheriff, freaking the markets out again. They rallied big when Trump won the election because they love his economic policies, which again were now going to see the tax cuts here in the not too distant future. It's already passed in the House, and then they got to reconcile it with the Senate bill, and then it's got to go through the Senate and then jump through some hoops, and then they'll get it done. So see a rally on hopes of that, or a delay, or some kind of positive news about tariffs. I know that sounds a little absurd, but again, we've had positive tariff news before. With at the beginning of this month, I should say, with February, the start of February, the tariffs went into place, and we had the concessions. I told you we were going to get immediate concessions out of Mexico and Canada, and we did. The tariffs lasted about a day and a half, and they were paused by Trump. We see more concessions out of Mexico and China. Trump's upset about the amount of fentanyl going across the border. He just said here this week, and that's why he's going forward with them. Further concessions are made, then maybe we get a delay once again. We'll see what happens. Maybe we get them and the market just shrugs it off. We've seen that happen before, focusing on tax cuts or other things like that. Now, yesterday during President Trump, he's moving the markets every single day with these tariffs. Concerns about a trade war, the concerns about inflation. Nevertheless, I digress. President Trump, he had the cabinet meeting yesterday, and he moved markets yesterday. Volatility, he had a rally, and then it fizzled out as President Trump, with this first cabinet meeting, started talking about the tariffs going forward on Canada and Mexico. But there was some misunderstanding because he used the date of April 2nd. So there was confusion whether that was going to be delayed, and the media addressed that. The White House later that day clarified that it was the March 4th date still. Trump reaffirmed that today. But we had also Trump talk about, at that first cabinet meeting, we had the president threaten to slap 25% tariffs on the EU. Now remember, we have the Commerce Department and others still going through, trying to calculate the tariffs for the U.S. and to level the playing field with tariffs in place on other countries and other things like the VAT. Now, as they're compiling that data, it's supposed to be on the president's desk on April 1st, and these are the reciprocal tariffs. Trump floated a 25% tariff yesterday on the European Union. So we'll be watching. Talked about the tariffs going into play on April 2nd. Now, again, things could be delayed. Negotiations could happen. And he's also raising the tariffs another 10% on China. So the tariff sheriff is back in town. The market's freaking out. Again, Trump's using all this as a bargaining chip. There might be further delays. We'll see what happens. I'm looking for an inflation freakout. Maybe we're starting that now. My guess is because we just had the inverting of the yield curve once again. About that in great length and detail in my update yesterday. I think that buys us more time, and we still go make new highs, but then we get it on steroids. We get a quick 20% drop in the market, and I think that's going to happen. Now, again, if we do recover, remember the feeling and the sentiment and the fear right now, because right now, if we do go and make new highs on the S&P, as I think we will, this could be a preview of coming attractions. Get a relief rally, then they go, oh, it's over. And we could rally into April if we can recover with signals, indicators turning back to bullish. Now, Trump did reaffirm today that, again, the tariffs on Mexico and Canada are going to start on March 4th. Now, we'll see what happens. Maybe over the weekend or on Monday before Tuesday, or maybe shortly after Tuesday, maybe, again, they strike a deal, pausing them yet again. We'll see what happens. Not only are we going to get these tariffs next Tuesday, but also we have the tariffs on steel and aluminum. Now, this is in addition to the tariffs on China, Mexico, and Canada. Trump has ordered 25% tariffs on the imports of aluminum and steel, which are going to take effect on March 12th. At the Canada and Mexico tariffs coming in, March 4th, plus an additional 10% on China, and then that is this coming Tuesday on March 4th, and then the following week on March 12th, which is Wednesday of the following week, then you've got the 25% tariffs beginning on steel and aluminum. And then the reciprocal tariffs in April at some point, as soon as April 2nd, maybe later, we'll see what happens. Again, we don't have the tariffs yet. They've been paused or delayed. In the case of the EU, compiling the data, started the tariffs with the steel and aluminum. Media is doing their best to convince us that we're about to have this trade war. Social media. I thought we were going to get an economic boom. Trump's just giving us a trade war. And we're just getting a trade war. Or flip it out. We don't have a trade war yet. Not saying we don't get one. A lot of the emotion, the media is trying to whip us up into a tizzy, trying to convince us that we're going to have all this inflation because of tariffs. Tariffs don't cause inflation. We're going to have this massive trade war, which we don't have yet. At least not yet. Getting this extreme fear and this extreme bearish sentiment. Yes, as we're going to see, the sentiment is at extremes, which I'll show you in a second. The fear, extreme fear is here. We see some type of relief rally. We see a tariff rally if concessions are made, negotiations happen, hopes of this issue being resolved. Very well could. We've seen that already happen in early February there with the Canada and Mexico tariffs. We're watching to see how all of this unfolds. But could all of this just be a preview of coming attractions for the final phase of the blow off top? We peaked back on February 19th. I told you we had divergences. I told you we had a failed breakout. But we weren't even at greed, levels of greed, when we peaked. The fear greed index didn't clear the 50 area. We moved back to extreme fear yet again very, very quickly. We'll be watching to see how all of this unfolds. But please support the channel with the link directly below that allows me to be able to provide you this information. Like the charts, you like the indicators, let me know that by supporting the channel today. If you could take a moment to do that, I would really, really appreciate it. Channels on YouTube make their money by sponsors. I choose not to do that. So I just ask that you partner with me and do what you can to help out. But I need to hear from you in order to make that work. If you like this information, you like the indicators, you like the charts, let me know that by supporting the channel. If you can help out for this time, I would really, really, really appreciate that. Watch the video all the way through. I'll be talking about what's going on with the S&P 500. I'll be talking about the Elliott wave count. Important stuff going on. The markets are extremely, extremely bearish surrounding the tariffs right now. The negativity is just through the roof. We're probably going to carve out a bottom. I told you we got a good shot at a bottom this week, as I talked about. The earnings with Nvidia, I told you to be watching. Did we bounce off this 200 or did we take it out? We took it out. So the risk is now that we come back and test this low and take that out and move towards this trend line. We're taking out the 200 period. That's very bearish. If we can rebound above it, up the 78.6 Fibonacci retracement of the rally here, okay, then you got a shot at getting back above it. But right now, you're closing back below it after trying to bounce off of it on Tuesday. So that's not good. May see a bullish divergence develop on the MACD. We'll be watching Nvidia going forward. Again, as I keep saying, I believe Nvidia topped already. Talked about the possibility, if I'm wrong, that we go back up into this area again. So far, we're not. We're getting another lower high after filling the gap from the DeepSeek sell-off and hitting this trend line. NASDAQ needs this to go higher in order to resume the advance. NASDAQ's coming down to the trend line from our log scaling. We're below the 20-week, but we're down almost 5% for the week, and we're down at that trend line. We'll be watching to see what happens there. We have these negative divergences. Risk is NASDAQ peaked with the topping tails that we've been getting in the monthly time frame. We have one right now, and we have one also from December. I'll be watching this trend line closely with our log scaling on the NASDAQ. The 2023 higher low that's set up above that 2022 low. Linear scaling, we're clearly breaking this trend line right here from 2024. And again, we continue lower, then we have the trend line right here with the linear scaling at lower levels from that same 2023 low there, higher low just above the 2022 low. These negative divergences play out with this sell-off right here. NASDAQ's down 4.92% for the week so far. Continues towards the trend line that I just showed you. The 200 period is right at that same level at 20,227, and that is a gap fill area, the 200 period is at the gap fill area at 20,227, which again is the election gap fill. We never did fill it, and again, we'll be watching to see what happens. But we've broken this trend line decisively. We've taken out the cloud. We've taken out the 100 period moving average. So the risk is we keep going. You've got the 10 and 20 still above the 50, but they're getting a bearish cross now. So is the S&P 500, and the MACD is moving into negative territory. We had these divergences, like on the MACD right here, with the failed breakout that we've talked about above the December high. We're becoming oversold with our stochastic. Will we find a bottom? Maybe we have to go down and fill that gap and hit the 200 before we do. With NASDAQ, again, we had these divergences with the failed breakout here. So watch the gap fill, 20,227. Watch the, and by the way, we're filling this gap already with today's low. Do we move down to this area? And the January low, let me just bring it up here so you can see it. January low, 20,538. We had a low today of 20,540, 2 points above that low. So it looks like we're going to try to take it out. If we do, you got that 200 period moving average directly below it, and our gap fill from the election, 20,227. So some levels to be watching. And right there at that area is that trend line. Near that area is our trend line here with our linear scaling. So just something worth watching. We're already testing the trend line with the log scaling. So again, do we go a little bit lower and hit that level? 200 period moving average. We are taking out the 20-week moving average, and we're right at that January low. We're 2 points above it. As we've dropped 2 points, we're 2 points above the January low. We filled this gap at 20,759. We're moving towards the election gap fill, but again, we're now forming a bullish divergence. It may not be done yet, but it is developing. It was a negative divergence that marked the peak over here. We had a confirmation of a lower high. Bullish divergences over here, giving us this bounce and then this bottom in January, and the negative divergences here giving us some volatility, and then the peak over here in December. So these divergences have done a good job in marking tops and bottoms. We're now carving out another one that could give us some kind of bounce and form another reference point of a divergence, or it could create a bottom in the not too distant future. But again, we're likely going to take out the January low here. PCE data, we've got the tariffs. We find support at that 200 period in the daily time frame. Do we find support near the election gap fill that we're moving towards right now? We're watching to see what happens with the bullish divergences here on these 60-minute charts. But again, that extreme fear and very, very negative sentiment likely going to carve out some type of bottom in the very near future. Now, just quickly, we had a failed breakout. Again, we tried to get above the January high over here. And again, you've got 1 point above it here. And then the real breakout right here, because that wasn't a decisive breakout, it failed. We never got the confirmation above this level. We never got a follow through. It never happened. So you have a failed breakout here. I can't call a 1 point breakout a decisive breakout. So again, looking at that bar as the breakout, and it failed. Okay, just like we had the December over here, you had a failed breakout here, here, and here above the December high. You had a failed breakout. Now we're seeing this sell-off. We're taking out the 100. We're taking out the cloud. So the risk is that, again, that we're going to go lower. These divergences, you can see it up here on the RSI and down here on the MACD. So we're now becoming oversold. Are we going to recycle back up and carve out a bottom maybe at the gap fill at 58.43, the CPI gap fill from back over here? Are we going to fill that gap and try to bottom above the January low here? Or are we going to move to take the January low out? So again, watch the video all the way through and you'll see the trend lines watching. Some are breaking, some are being tested. Look at the support levels. CD, if it firms back up, we can rebound. You stay negative, you're going to get a bigger drop. Now, I have 4 Elliott wave counts in play that I showed you over the weekend. 2 of them have been invalidated. We have this one here, and we have the other one where minor wave 4 didn't complete here, but we're about to complete it. The bearish scenario would be that we peaked already with the failed breakout that I talked about. But you get a 5-leg push down, and then when you go back up, you make a lower high, and you can't make new highs. Guess is that's not going to be the case, but I had somebody ask me about that, so I thought I'd share that with you. Look, again, this count right here, if we take out the January low, this count gets invalidated. So do we have a 1, a 2, and we're now going to get a 3, 4, and 5. I'm watching that CPI gap fill that I've been talking about. Watching this trend line, I told you to be watching to see if we try to bottom around the trend line. I told you we had a shot at a bottom with Tuesday's low. If we can rebound at this trend line in the 100 period, we're taking them out now and moving back to the CPI gap fill. So we get further declines. Again, we're going to close below that level, or if we can't claw our way back up, we're going to close below that level on the weekly chart. We broke it here in the daily time frame, and I talked about that at great length and detail. Underneath that, we have the 200 period. Now, Bitcoin's testing the 200 period. Maybe the S&P moves back to the 200. Again, Bitcoin is at levels of extreme fear, forming bullish divergences at the 200 period moving average, and it's at a trend line of support from the 2024 lows of the last correction. The risk is that we keep going, and I talked about this scenario, and I talked about if this is invalidated, then we have the other scenario where we take out the January low, and if we do, that 200 period then comes into play here in the 5,700 level, and we take out the January. See that. Now, if I bring up my other chart with the ABC on it here and the gap, CPI gap fill area, it's 58.43 and it's directly below. So we'll be watching that. You take that level out, the risk is you take out the January low. That would invalidate our current count as not being an A, B, C move, but it would invalidate it by dropping below wave 1 here. So do we have wave 1, A, B, C, and then we're going to get wave complete wave 2, then get 3, 4, and 5 and go higher, maybe towards the trend line here, which we've talked about at great length of detail from the July peak, and that's right at that same level as the weekly chart. So we're watching, will this count be invalidated? Now again, you take out that January low, you've got your 200 period moving average directly below. RSI still in the negative region as we get this major sell-off, going back down now, and again, towards that January low. Again, told you in January, the bottom there, I thought we'd have a continuation of the election rally, which we got over here. Again, the market celebrating because they love Trump's economic policies, but they hate his tariffs. Here, celebrating I told you we get a rally ahead of Inauguration Day, had the breakout the day before Inauguration Day. The market celebrating continuation of the election rally, but then the tariffs, we had the DeepSeek sell-off, and then Trump and his tariffs over here, Canada and Mexico, and then more concerns about tariffs here, and now more concerns about tariffs over here. So again, we'll be watching to see what happens in this area. We are breaking this trend line, though. We'll see what happens by the end of the week. We have the trend line. This is a trend line going back all the way to the 2023 low. And we're breaking that in the weekly time frame. But do we get above it, or do we have a decisive break? There's risk of testing the 200 period if that is the case. Now, as we're coming back to fill this gap, remember, we're seeing the sentiment extremely bearish, and we're at extreme fear. So just keep that in mind as we're going here towards our CPI gap fill. We're seeing the stochastic become very oversold. So do we see it recycle back up? We're seeing the same thing on Bitcoin. The same thing's going on. We'll see what happens. Or S&P join Bitcoin and go down to the 200 period. Now, with our log scaling, we are breaking the trend line. Remember, we slightly violated it in January. And again, if you connect that low in the 2023 low to the January low, we're violating that trend line. We're violating the one that was a little bit higher if we connect the low here from the summer of 2024 to the January 2023 low. We are violating that trend line here with our log scaling. Looking at the daily chart, if you look at our linear scaling, and whoops, my trend line moved on me. Look at our linear scaling with the S&P 500 daily chart, we are right at that trend line from the 2023 low. We're coming right to it. And directly below is our gap fill. So we're going to be watching this trend line very closely. Again, some people look at linear scaling. Some people look at the log. I look at both. Get good information from both. So I find it very, very useful. Most people just usually look at the linear more often than not. This is a linear trend line right here that we've come to. So we'll be watching. Do we break that? We're already breaking the log trend line in the weekly time frame. Losing the 100 period in the daily, not good. We're losing the 20 week in the weekly time frame, not good. But we're doing that as we're getting extreme fear and we're at levels of extremely bearish sentiment as we've seen in the video. As we're at that trend line with our linear scaling, I'm going to be watching this gap fill, the CPI gap fill at 58.43. Our low today, we closed at the lows here, just right above the lows of the session. Our lows of the session were at 58.58 or 58.59 if we round up. So again, we are just directly above this gap fill right here. We'll be watching. You take it out, you get your 200 period. You'll be taking out that trend line. If we can gap lower, maybe you get a gap and trap, you gap down, and you begin to rebound back up with these stochastics are now at extremes. Get some kind of news tomorrow. Maybe we get the CPI data or the PCE data and it's cool, or maybe we get it and it's hot and we get some other kind of news out of Trump that moves the market again. Trump's moving the market every day. Might as well just go over there and move in, at CNBC over there. What he's doing every day is moving the market. The election and the tax cuts and the tariffs and the trade war and everything all going on with that. Watching, again, do we have our second subwave? Now this count says that minor wave 4 finish here. We have wave 1 and 2. Wave 2 is still under construction for our second subwave of minor wave 5. Minor wave 5 here. And then it's going to unfold in 5 waves. Now if this is invalidated, we take out the January low, and let me show you that count. And if we do take out that level, then you have the 200 period directly below. If we take out the January low, we have the 200 directly below, and we have the breaking of the linear trend line going back to the 2023 low. Again, this count, I talked about these counts over the weekend, and again, told you the different possibilities. We had a failed breakout, and the reversal I talked about that on Wednesday, before the sell-off started, the negative divergences on the 60-minute charts and the other intraday charts warned this would happen. Watching to see, would we find support at our trend line? We're now breaking that decisive break there. So our gap fill, and if we continue lower beyond the January low, you've got your 200 period. And again, I've drawn a parallel boundary to this upper boundary here from the July peak, the July trend line where we turned off of it there in December and November. So we'll be watching to see if this count plays out. Rejection at the 200, we got above it on Wednesday, fell right back below it. Trump freaked the markets out. Today we had a gap higher, and we had a gap and trap, and we came back, we filled the gap, and then we tried to rally. We got rejection at that 200 period moving average. And again, you got to get back above the 200 period here in the 5-minute time frame if we're going to recover. As I said, we moved to a new low, got the trend line. So we'll be watching to see what happens. We're at extremes. We'll be watching to see, even if the PCE inflation data comes in hot, does a market gap lower and then rebound or something, try to bounce off of that trend line? But we do have that gap fill, the CPI gap fill from last month, January, that we'll be watching. Quickly warned you. Let me shrink this down for a moment. I warned you about these divergences on the 15-minute chart, the 30-minute chart, and the 60-minute chart. They were warning we were going to have a sell-off and that we had a failed breakout. And again, we talked about this at great length and detail, the 15-minute chart. And again, it's possible now that we have this 5-leg push low. We're forming these multiple point divergences. And look at this. Again, this is the divergences that I warned you about. We sold off, but look at, we have potentially a 5-leg push lower. And we'll be watching to see if we fill the gap. But we had this divergence, again, giving us a bounce to the 50 on the 30-minute chart, and then now pushing lower. Do we see a bullish divergence complete here, or get something like this and finish this off? Going to be watching these divergences. They tipped us off to the top. Will they mark the bottom? This one did not, and that was Tuesday's low. I talked about that possibility. We've now taken that out. So it looks like a multiple divergence is now developing. Here it is on the 60-minute chart. Again, this divergence tipped us off to the peak right there, and the failed breakout. We talked about that in the daily chart at the time, and this divergence. And again, it's given us a sell-off. Now we're getting the death cross, and we're dropping below the 200. And here, we've now taken out the low over here. We've taken out the trend line. So you've got your CPI gap down here at 58.43. We're watching it. It's directly below. So we're going to be watching that. You take out the January low, you're going lower. It was a 200. Bitcoin took out the January low and did move to the 200 period. But again, got all these bullish divergences on the 4-hour chart, just like the S&P is trying to form here on the 60-minute chart. Could we be forming a bullish divergence? Still may be under construction surrounding our CPI gap fill and get a higher low. And if we do, then this count is very much still in play, where we have minor wave 4 over here. We have the wave 1, our first subwave of minor wave 5. You get your A, B, C for A, then you got an A, B, C for B, and then you get this 5-leg push lower for the C move and 5. So again, that complete the wave 2. You got wave 1, wave 2, and then we get 3, 4, and 5, and we go higher towards our levels. A lot of chop and slop in here. We've had it. Negativity we have right now, our sentiment is higher than it was back with this sell-off over here, back with these sell-offs with DeepSeek and with the tariffs over here, and back with the sell-off that we had from the July low down to the August low and the sell-off we had in September. All of the sentiment, it's much more bearish here. We see a bottom here surrounding this gap fill. Maybe. We'll see what happens. But you're forming a bullish divergence. And I continue to point out these divergences have navigated the turns on the S&P 500. Absolutely incredible. Allowed me to make some pretty amazing calls, calling the bottom over here, calling a top over here. Multiple point divergences. We talked about these bounces, and we talked about the peak over here, and the sell-off and the back test, and the bullish divergence that developed right there. We talked about all this, and we talked about the last one that we had. Do we have one here that gives us a bottom? I think you're probably going to get it. And again, markets bottom on bad news. And brother, are we getting some bad news? I think we'll see something that will give us maybe the tax cuts or some other kind of rally. They're talking about these Doge dividend checks. If they're going to do it, it will not create inflation. It will be money that's already been earmarked for other government things. So if they give it as a tax refund or dividend, as they're calling it, just keep the deficit at the same levels. Had the spending gone on, they use it to reduce the deficit spending, then it would go down by whatever amount of savings that they have. But if they do that, it will not create inflation. But does that somehow give motivation for rally? Again, Wall Street likes Trump's economic policies, but they hate his tariffs. That's really what it comes down to. Understand that, you understand the wild swings with President Trump. Yay, Trump's elected. Yay, Trump's elected. Trump's, we get the inauguration. Trump's sworn in as president. Trump's giving us tariffs. Greatest tax cut. You see what I'm saying? It's back and forth. This love-hate relationship Wall Street has with Trump. It's kind of humorous. Sorry. Cracks me up. I think this divergence is going to complete here. It may not be done. We may fill this gap, and then we'll be watching. Does the January low hold? Here, look at the bullish divergence developing on the MACD. Same thing. You had the bearish divergence give us a sell-off. You got the bullish divergence now developing. And a bottom is likely going to take place. People are very, very emotional. At these peaks, they get extremely bullish. And then at these downturns in the market, they get very, very, very bearish. Now, the VIX is predicting we're going to have a bounce or bottom within 2 trading sessions. I bet the VIX is going to be right. 85% chance we have an update on Friday or Monday. And again, maybe we see the tariffs delayed further, more concessions made. We'll see what happens. Maybe the PCE comes in cooler. It's supposed to come in cooler. Saw that, though, with the CPI, and it came in hotter. Be watching. The VIX is predicting a bounce or a bottom in the next 2 trading sessions, and I think you're probably going to get a bottom. The VIX is going to predict a bottom yet again.